Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial documents and make sense of them for you. Alright, today we have Regencell Bioscience Holdings Limited, their annual report of Form 20 Fent. Let me tell you folks, the story here is all about big ambitions in the biotech space and some very lean financials. Did they manage to turn things around, or are we still looking at a company trying to find its footing? We'll dive deep into that. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can connect with other finance enthusiasts and get direct access to these kinds of breakdowns. Alright, so this is an annual report, folks. It tells us about the company's performance over the fiscal year that ended on the 30th of June of 2025. One of the first things they tell us is that by the end of June 2025, they had a whopping 494 million ordinary shares out there in the market. That is a lot of shares. Now let's look at who is running the show. We have Mr. Yat Gayo as the Chairman, Director, and Chief Executive Officer. He is also the founder and has a very significant stake in the company. He graduated from UC Berkeley and has quite an interesting background in investment banking and even technology. He is also very involved in charitable work, which is commendable. Then there is James Y. Hong Chung. He holds a few key executive positions and brings experience from finance and technology firms. Yat Puyo is the Chief Business Officer and has over 24 years of experience in strategic management. It is also worth noting he is Mr. Or's brother, and rounding out the leadership team we have independent directors like Ivanaye Wahui, who brings extensive retail and brand management experience. Margaret Horhan Low is also an independent director with over 30 years of experience in real estate investments. And Dr. Wing Yan William Low brings a wealth of experience in biopharma and corporate governance. It is good to see a diverse group of advisors. Now let's get to the nitty-gritty, the risks. This is where we find out what could go wrong, and often it is a lot. The company is up front. They are an early-stage traditional Chinese medicine bioscience company. This means they are still developing their products and have not yet made any sales. And the numbers reflect that for the fiscal year ending the 30th of June 2025. They reported a net loss of $3.58 million, and for 2024 it was even higher at $4.36 million. That is a lot of money going out without any coming in. This is a stark warning, folks. They have no revenue, no approved products, and no patents. They explicitly state they may never be profitable. Investors need to be very aware of this. Their main focus is on developing treatments for ADHD and ASD using traditional Chinese medicine. But this development process is long and expensive. And then there are those unforeseen circumstances such as health epidemics that could seriously impact their research timelines. The stock market has seen this company's share price go up and down quite dramatically. In fact, just in 2025, they saw their share price range from as low as 83 cents to a high of over $83. This kind of volatility is usually a sign of speculation rather than solid company performance. Let's look at the company's history and what they actually do. As we heard before, they are an early stage company focused on TCM for ADHD and ASD. Their goal is to be a global leader in natural holistic treatments. Their plan is ambitious. They want to prove their TCM formula works, get patents, build production facilities, brand and commercialize their product, expand globally and research other applications. It is a big roadmap for a company that is just starting. They highlight the prevalence of ADHD and ASD globally, estimating millions of children and adults are affected. This is to show there is a large market need for their potential products. A key part of their strategy is their partnership with Mr. Sik Ki Au, the father of their CEO. He is the one with over 30 years of experience in TCM and has developed the core formula they are working with. They have exclusive rights to his formula and intellectual property. They believe their TCM formula targets the root cause of these disorders, unlike conventional medicines that primarily treat symptoms and often come with significant side effects. Their belief is that their natural ingredients work holistically to improve overall health and brain function. They've conducted a second efficacy trial on 28 patients with promising interim results showing reduced symptom severity for ADHD and ASD. This section is where we really dig into the financial performance. Let's start with revenue. As expected, they generated no revenue in 2025 or 2024. This confirms they are still in the development phase. Their selling and marketing expenses dropped significantly from $125,000 in 2024 to just $8,000 in 2025. This drop suggests they are cutting back on promotional activities, perhaps waiting for product approval. General and administrative expenses also decreased from $3.55 million in 2024 to $2.81 million in 2025. This is mainly due to lower share-based compensation expenses and depreciation charges, as some assets are fully depreciated. They also had a payroll decrease, which might indicate some cost-cutting measures. Research and development expenses also saw a slight decrease from $1.07 million in 2024 to $948,000 in 2025. This dip is largely attributed to lower rental expenses and building management fees, and the bottom line still shows losses. Net losses were $3.58 million in 2025, down from $4.36 million in 2024. While a smaller loss is better than a growing one, the company is still burning cash. Looking at cash flows, we see a similar trend. Net cash used in operating activities was $3.11 million in 2025, down from $4 million in 2024. On the investing side, they had a net cash inflow of $2.69 million in 2025, primarily from the maturity of short-term investments. This shows they are managing their cash reserves. This is a critical part of the report. The company acknowledges there is substantial doubt about their ability to continue operating as a going concern. This essentially means they might not be able to pay their debts in the future if they do not secure more funding. Let's talk about the people behind the company. Mr. AU, the CEO, still holds a massive 88.6% of the company's shares directly or indirectly. This means he has a huge amount of control over the company's decisions. They have a share option plan, which is a common way to incentivize employees and executives. As of today, there are over 24 million share options outstanding. Who owns the most stock and any interesting deals? As mentioned, Mr. Yat Gai Or through a holding company, and his spouse beneficially owns over 437 million shares, representing 88.6% of the company. This is a very concentrated ownership. There are some small payables to executives for expenses, but nothing alarming. Also, there are payments made to Regeneration Company Limited for TCM formula and materials. This is a related party transaction, but the amounts are not huge. This is where we find the detailed financial statements. The auditor's report highlights the going concern issue we talked about earlier. Looking at the balance sheet for the 30th of June 2025, they have about $2.4 million in cash and another $2.4 million in short-term investments. That is good for liquidity. However, their accumulated deficit is over $25 million. Remember, this is the total net loss since the company started. Here is the income statement. As we saw, no revenue, just expenses leading to net losses for all 3 years presented. They report over 494 million weighted average shares, outstanding a significant number. And their loss per S-share for 2025 was about 0.72 cents. The cash flow statement shows consistent cash burn from operations. In 2025, they used $3.11 million in operating activities. That is a lot of cash moving out the door. They did bring in $2.69 million from investing activities, mainly from maturing short-term investments. This is how they are managing their cash survival. This note reiterates the going concern uncertainty. They absolutely need to raise more capital to keep the lights on. This is the technical stuff about how they account for things. For example, how they value their share options. Their property and equipment net worth is relatively small, just over $215,000 in 2025. This indicates they are not a company with a lot of physical assets. Here we see the ordinary shares and additional paid-in capital, but also that large accumulated deficit. This section covers a lot of legal and corporate details. They also compare Cayman Islands corporate law to Delaware law in the US, which is interesting for investors interested in corporate governance. And for us investors, there is a significant discussion about passive foreign investment company or PFIC rules, which can have serious tax implications. So what is the story here? Regencell Bioscience Holdings Limited is a company with a bold vision to revolutionize treatments for ADHD and ASD using traditional Chinese medicine. They have a strong focus on research and a strategic partnership with an experienced practitioner. However, the financial reality is stark. They are burning through cash, have no revenue, and their ability to continue as a going concern is uncertain. Their significant cash burn is directed towards research and development, which is essential for their business model, but also poses a high risk. The concentrated ownership by their CEO also means decisions are heavily influenced by one individual. Their biggest strength is their unique approach using TCM and the expertise of their practitioner. Their biggest weakness is their financial precariousness and the long, uncertain path to product approval and profitability. The stock price volatility also suggests a high level of speculation and risk for investors. Ultimately, This looks like a high-risk, high-reward investment, heavily dependent on successful product development and regulatory approval in the coming years. That is our breakdown of Regencell Bioscience Holdings Limited's annual report. What is your take on their TCM approach and their financial situation? Do you think they can overcome these challenges? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps out the channel, and make sure you subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.